So we have quite a few central banks, major central banks around the world, cutting interest rates. It looks like this is the season for it. If you're in the marketplace, you know that July and September are the best months for central banks to cut interest rates if they want to do that. So it was not surprising then when U.S. Fed Chief Jerome Powell signals there'll be a rate cut just July. We saw the South Korean Central Bank. We saw the Bank of Indonesia Central Bank also cutting rates. So what's the outlook and the considerations for Nigeria's Monetary Policy Committee? We've got a few feelers from the marketplace about what the body will do today and tomorrow, the announcement tomorrow afternoon. But let's just get some of these external and domestic considerations for this week's MPC, July MPC, from Uchenna Minis, who is the Chief Market Strategist at Eagle Global Markets. It's live here at our headquarters studios. Good morning.
Good morning.
Welcome. It's good to see you. Let's look at some of the externalities. This is the season for it. So you analysts are the ones who are making all the calls, as it were. How much of external considerations do you think Godwin Emefiele and his team will be considering as they start their meeting right now?
It's quite important for the central bank governor and this management to consider the external factors as they really determine how policies are being adjusted, really. For the Federal Reserve in itself, it actually is looking to cut interest rate, basically as a result of the global headwind risk, and not necessarily as a result of the domestic risk within the U.S. The U.S. in itself is actually doing quite well, but the Federal Reserve needed to understand that the global risk and global downside risk can always be filtered into the U.S., and they need to front-run that.
So U.S. will look at external issues. The economy is not doing badly bad. Other foreign central bankers around the world use the U.S. Fed as the barometer, the FOMC,
yes,
and by extension, the Fed chief himself. So
right now, what Jerome Powell has looked to do is kind of just readjusted the Federal Reserve as more as the central bank for the world compared to the central bank for the U.S. Basically, trying to window down the headwind risk when it comes to the global slowing growth, as it were. Yeah,
I'm sure you strategists would also be looking at the ECB as a major region where you have a number of Nigerian banks. We have Eurobonds out there. Then we have corresponding relationship with several European commercial banks. So whatever happens at the ECB is very important. This is where Christine Lagarde is just coming in. Mario Draghi is leaving before the end of the year. So that will also be part in your crosshair as well as an analyst.
Yeah, so after the Federal Reserve reiterated that it would look to cut interest rate, it wasn't surprising for the ECB to also come with the same narrative, saying that they will look to employ significant easing tools to help to boost inflation to their inflationary target, as it were. So the ECB in itself would also cut interest rate. They've re-announced that they would look to stand their bond buying program in September, something they just stopped in.
We just less than 3 months ago or thereabout, and they're back in it, which means that all is not really well with the big economies in Europe, starting from Germany, Spain, Italy.
Germany, Italy have been in technical recessions for a bit now, and that's quite significant. And the ECB is looking to front-run that. But the problem now with the ECB, unlike the Fed, the ECB don't have significant leeway in terms of cutting interest rates. They are literally at the zero-bound level right now. The Federal Reserve has the 2.50 to work with. So we're getting to that point where if it's time of push comes to shove, what exactly will the ECB do when it comes to conventional monetary policies, really?
Why are we interested in what happens with the ECB and the Fed, for example? Why is Nigeria interested?
It's as a result of how dependent we are as regards to our reliance on global trade. So whatever it is we get to want to do, it has to be considered based on the fact that the Euro Central Bank and also the Federal Reserve, in terms of the price valuation of the US dollar and the euro. And there is that interrelationship between the euro and the US dollar. The euro is actually somewhat the 51% trading partner with the US, and that in itself put the US in a place where they need to also consider the current growth momentum in the ECB.
You think so? And you think we should also consider what interest rate decisions are with the ECB and the Fed as far as financial flows into our own frontier market is concerned?
Yeah, as with the Fed looking to cut, and we don't actually think they will just cut once. We think they will all follow
Cut
through.
the rest
Yes,
of the
yeah,
year,
yeah.
perhaps in September again?
Because they are facing significant political pressure within Washington, as it were. And John Powell, as he has shown, he has literally come to point to the fact that they will look to do their very best to sustain the economic expansion as much as they can. So if there is the threat of global slowing down, I believe Federal Reserve is looking to front-run that. So if that is the case, a weakening dollar in itself gives Nigeria that holistic benefit, as it were. Yeah.
In terms of our financial assets.
Yes. So we have a lot of debt in the US dollar, and having a price valuation in US dollar kind of dwindled down. That helps us to service.
Yeah, we look at our sovereign bonds.
Yeah.
If US lower interest rate, that means good news for Nigerian authorities
Yeah.
to say, look, even for our corporate bonds out there with the bank.
It's good news for emerging and frontier markets, really, if the Fed looks to continue easing towards the end of the year.
But in terms of the brick and mortar economics, if you go a little bit to the Far East and you talk about China, we have a currency relationship with the yuan. So we're also interested in not just the currency issue, but about the growth of this big economies. China is slowing down from its top around 10%, 9%, is now going to around 6% in terms of growth.
Which is quite a key issue why our central bank needs to pay attention to, because China is actually very, very significant in terms of importation for us. And because of how much China has established itself as a behemoth in the global trade community, it's slowing down would have that ripple effect into economies that are directly related to China, and that is quite significant for us. So if China slowing down as a result of escalation with US trade war, that is not so good for us, really.
If you look at a bit of international assets that you cover and you track on a daily basis, trying to get a sense of the markets. We look at oil, we look at gold. These are top commodities in everybody's portfolio and every central bank's portfolio around the world. So we keep an eye on that, even though we don't produce as much gold as to make any impact significantly in the global space. But we keep an eye on this as well.
Yeah.
What's your position? What's your reading here of gold, crude oil prices?
Okay, so let me start with crude oil. Crude oil basically has kind of dissociated itself. Its pricing has dissociated itself from the possibility of the control of OPEC, really. So we can see after the last meeting, OPEC highlighted that they will look to cut interest rate up until 2020, and even Saudi Arabia came out to say they would even cut beyond their production quota. We saw oil price dwindle and lose about 3.28% after the release of that news, highlighting that OPEC is really, really not in control of oil prices anymore. It's quite significant, as it's basically that's what is happening. So they look to sign a charter with OPEC Plus because they're trying to highlight to Russia and other people that are not in the member countries or the bloc, saying that we really need you to come on board to help us control oil prices. Right now, basically what has really pushed oil prices to where it was is just the involuntary production cut as regards to Iran, Venezuela, and Angola. Yeah. And for gold...
For bullion, yes.
Yeah?
Yes, for gold.
Yeah, for gold, gold is kind of reliant on two variables. And those variables are, one, the current state of the US dollar, and also the global risk is a safe haven commodity. So investors will always try to push their portfolio to places where they consider as having that intrinsic value, which gold have. But right now, with the Fed looking to ease monetary policy, we expect a weakening dollar, which would help gold appreciate.
How much more attention do you think the Central Bank of Nigeria should play to Brexit? Yesterday evening, Hammond, the UK finance minister, says he's going to quit office if Boris Johnson wins the Martin Downing Street. That's coming straight through the front door. So
for UK has kind of shown that right now they're entirely confused as to what they want with Brexit. Brexit in itself has another variable, which is the European Union, and the European Union has stuck their foot out, saying that there is a particular level and there is a particular leeway they will look to allow for in terms of Brexit. So right now, even if Boris Johnson comes in, there's really nothing he can do. And he was trying to kind of restrict the parliament so they can work with a no-deal Brexit. But as it were, that has been voted out. So right now, It's just that he's just going to continue with the circle that Theresa May did stop with, really.
Quite interesting. Okay, so let's talk about domestic considerations. What do you think? What's on your radar as far as domestic considerations are for the MPC today, tomorrow?
We think that the MPC in itself will get to understand the domestic. We have inflationary target actually dropping to 11.22% from 11.40%, and that is sort of giving to work towards the inflationary target of 11% that the central bank have looked to work with towards the end of the year.
But do you think this blip will be enough? As it will be comforting enough for the MPC to say, let's give it another haircut?
No, I think not. I think not, because domestic is just one side of the variable. There's also the external part of it. So although we have domestic variables moderating and stabilizing, we are also the NCB would look to pay attention to the global risk. So I think they would leave rates unchanged, basically.
What do you think about the fiscal space? Do you think the MPC members will consider a bit of a drag in fiscal activities? This is the second half of the year. We don't have a cabinet in place. Do you think we're part of the considerations?
Which is one thing, because if you even check emerging market, Nigeria is actually doing significantly bad compared to the rest of emerging market, and that's a result of a couple of risks. We have oil prices not as stable as Nigeria would want it to be. We also have our local political risk, where our ministerial cabinet has not been confirmed, basically, and we also have the global trade war as a slowing down, should I say, trigger, and that is putting foreign investors, in that place of pessimism, saying that, well, we don't understand what really is going on within your political landscape, and so we have to be cautious in terms of, because you need to understand the FIs basically don't really have to be here. They just look at the variables and the metrics from the external picture, and they have to say, well, until those things are sorted out before we can really come true. Yeah.
Okay. Uchenna, thank you so much. We appreciate your coming in bright and early this morning. Do have a great week. Uchenna Amini is the Chief Market Strategist at Eagle Global Markets, based here in Lagos.